Hey guys, so I want to talk about setting expectations and why that's so important. And I'm going to talk about the five things that, you should really do to set the expectations the right way. Let's get right into it. A lot of guys that are starting to buy their first businesses or on their journey to become an acquisition entrepreneur, what they won't do is actually set the right expectations. And what happens is they end up putting a lot of time and effort in the beginning, and they actually get burned out really, really quickly, right? Because they thought that this was something that you could just kind of, get into, and it's going to be very simple, very easy to pull off. In about 3 months, 6 months or so, you have your first deal and it's done. And a lot of these guys think that they're going to get into this business and buy up a few companies, just put them together, and then sell them off in about 5 years or so and make $1 billion. Now, that is very dangerous thinking. It's not bad to be ambitious, but it is very bad when you don't set the proper expectations, and then you end up, kind of giving up because you didn't hit the goals that you wanted to hit or achieve the goals that you wanted to achieve. And then you end up not liking what you're doing and get into something else. So let me just help you guys out, right? And talk about some of the five things that is some of the things that you need to do to set the expectations when you start becoming an acquisition entrepreneur. Let's get into it. One, you want to be clear and very specific. What does that mean? Now, it's good to be ambitious, like I said, but not unrealistic. So that means the plan that you have, break it down into segments. That way, it's a achievable goal. For example, if you say, "Hey, I want to buy 50 companies in the next 5 years, and then exit this portfolio altogether to a private sell, and we're going to sell at 15 times multiple, right? And we want to achieve, or we want to exit at probably $1 billion." Now, being very clear is going to help you realize and understand what you need to do, but also being very specific. So within that goal that you have, that timeline, how are you going to achieve that? What is the first step? What is the second step? Third step, fourth step, and so on and so forth. You need to be able to break these things down to where it's a smaller goal, right? And you have milestones that you're achieving. So that way you're not getting burnt out, but that vision that you have is extremely clear. Just at a glance, you know exactly where you are and how to get there. So it's good to have a dream, but once you break it down to actionable steps, that becomes a goal that you later achieve. So you have to be very clear and very specific on what it is that you want. And you have to be very clear and specific on your abilities, strengths, and weaknesses. So you have to identify what these things are. Number two, you have to consider all parties involved. So a lot of people, they would start, they say, well, I'm the only one involved right now. I'm going to get some advisors. I'm going to get an M&A director, accountant, lawyer, right? These operators, and help so they can help me achieve my goal. But here's the thing. You have to be mindful of those individuals and what they have going on and what are their end goal, right? What are they trying to achieve by working with you? So that way you're not in a predicament to where your mission statement is not aligning with your team or your board of directors. And if your mission statement, is not something that aligns or everyone on the team aligns with, then you're gonna have difficulties in communication. It's gonna be a lot lengthier for you to close deals, and your team is not going to be as responsive as they should be. And this is very important when it's time to capital raise and you're meeting with investors, and these investors they're gonna wanna know how responsive and active your team members are. So keep that in mind. You wanna make sure that everybody on your team understand what the mission statement is. So that way, anytime that you have a meeting and it starts to deviate from that mission statement, you can bring it right back on track and everybody know what that is, right? But you have to consider all parties. It's not just, hey, I'm gonna get into this, I'm gonna do this, I'm gonna get these people to work with me, I'm going to compensate them this way, that way, but it's all about me. That is a quick way to actually fail miserably in your endeavor, and you're gonna, be upset that you didn't achieve the goals that you set out to achieve. So be very mindful of the people that are involved with you, what are their end goals, and make sure that their interest aligns with your interest at the end of the day to be able to pull off what you want to pull off. Number three, and this is very important, communicate effectively and openly. Well, communicate honestly and openly. So when you're starting out and, part of setting the expectations is the way that you communicate with your team and how honest you are about it. So when I started out, I told people, hey, listen, I do not have corporate finance background. This was 2 years ago. I don't have corporate finance background. I do not have healthcare background. I'm not a legal guy, so that's not my forte. But where my strengths are is I am a deal maker. I have experience doing 90 million and larger deals from my real estate days. And I also have a marketing background. And my marketing background allows me to actually come up with a marketing strategy for the businesses that we're interested in acquiring. And from there, myself, I can grow that business from 15 to 30%. But you have to be able to let people know what your weaknesses are, because a team does not comprise of a bunch of people that have the same capabilities and backgrounds. A really well team, or a good team, great team, should actually complement each other's weaknesses, right? So whatever you're weak in, whatever your weaknesses are, you should have people on your team that complements that, and vice versa. So you as a leader, you should be able to lead your team not into a ditch, but successfully. But your team will be right by your side to be able to guide you, and maneuver some of these dangerous roads that you'll encounter. But your team is going to be there to tell you, hey, go left, go right, slow down, speed up a little bit. Don't go down this road, go down that road. That's what the team is for. But you have to be able to communicate honestly and let them know, hey, I don't know this, I don't know that. I do not have a background in doing X, Y, Z, which is why I have you guys to be able to shore up some of the weaknesses that we have. So that way, the whole is greater than the sum of its parts. That's ultimately what you want to achieve. So you want to be able to communicate very openly and honestly with your team, and this is gonna help you set expectations. Now, number 4, set realistic and achievable goals. I kind of touched on that in number 1, being clear and specific, but let's just talk about that, right? Being realistic, like I mentioned before. You say, hey, I want to exit at $1 billion. Okay, look, that's great. And nowadays, $1 billion company is not that rare, as it was 10, 15, maybe even 20 years ago. That's a unicorn. It's not that rare nowadays. But if you say, hey, I want to exit at $1 billion, which is selling the company for $1 billion or going public and achieving a $1 billion valuation, you have to understand certain things. For example, if you say I'm going to buy medical practices, okay, that's great. You want to buy 50 or 100. Okay, that's great, but how exactly are you going to achieve that $1 billion valuation? Do not just acquire companies haphazardly or anything that comes your way. Hey, this is a healthcare or whatever your industry is, but for the sake of this argument, this is healthcare. You're not just gonna buy these healthcare practices and businesses and then think because you have a portfolio of 50, it's actually valued at $1 billion or it's worth $1 billion. That's not the way it is. You have to be realistic about the companies that you're acquiring. What kind of technology are involved in these companies, and what would merit $1 billion exit when you do exit with the portfolio that you have? Meaning, do you have something that is disruptive? Do you have something that is proprietary, or is it AI driven, enabled, or anything like that, right? So if you're just buying companies just to buy, yeah, you can get a really successful exit, but it may not be in the range of $1 billion if you're not having some kind of disruption, or you're bringing some kind of proprietary technology in your portfolio within these companies. If you're not bringing proprietary technology to the market, I don't really see a realistic way of achieving $1 billion exit, right? So you have to think about that. Don't just buy and bunch these companies up for the purpose of buying and bunching them up, but you have to be realistic and you have to have a plan that say, hey, we're buying these companies for this reason and that reason, because we understand the landscape, or we understand that some of the potential buyers that we would have in 5 years, the reason why they would buy the entire portfolio outright is because they have a track record of investing in this company or this portfolio, that portfolio, or their portfolio as a whole consist or comprise of these kind of businesses that we have. And again, it is something that's disruptive, something new that you're bringing to the market, whether it's technology, AI, or anything else. So you have to think about how are you going to actually achieve $1 billion exit, not just by buying companies and thinking they're going to be valuable, but it has to actually be valuable. So be very, very realistic when your approach, and make sure it's achievable. Again, $1 billion exit is very achievable, but how are you going to achieve that $1 billion exit? who is your primary buyer, right? Are you going to take it public? If so, what kind of market or what kind of a price per share are you looking to achieve with kind of business that you have, and is that industry standard for that kind of industry that you're in? So keep that in mind. Be very realistic. Now, lastly, you have to adapt. I think this is the most important right here when it comes to setting expectations. Being able to adapt in your landscape environment or situation, right? For example, I started out in medical devices, and 2.5 years later, I'm actually not in medical devices. I'm in, physician practices. Now, the thing is, medical devices is very complex. When I started out, I did not know that. I didn't have the experience to know, hey, this is something that is very high barrier to entry, and we're gonna need about 50 million to acquire a reputable and profitable medical device manufacturing company. So this is something that it took me about a year to learn and to actually pivot, but I had to adapt. I had put in mad work with the medical device and everything else, the investment thesis, our strategy, everything. It was a lot of work that went into it, but ultimately I had to adapt and I had to change up and recognize that this is not a path that I want to go down right now because it is just too high of a barrier to entry. And I would have a lot more success if I pivoted and went to a different sector in healthcare that is a little bit less barrier to entry, but still not a lot of players are in, or not a lot of people are doing the same thing. So I had to actually be able to look at what's happening, look at the environment, look at the capital raising efforts that we were doing, look at the investment thesis as a whole, and say, is this something that is actually doable for the time? No. What do we need to do? Are we going to change or go into a different industry completely? No. But what we have to do is adapt to our environment, our landscape, and thrive within that. So you have to be able to adapt in situations because expectations change all the time, which is something that I actually said in the beginning. I always told people I am very open to interpretations and change as we go along, and as our corporate strategy and our investment thesis mature, I am very open to interpretation and change. So you have to keep that in mind as well, because the strategy or your investment thesis that you start out with may not be what you end up with in a couple years from where you are now. So just keep that in mind. But you have to be able to adapt in situations and environments to be able to be successful. But these are just some of the 5 things that I could think of when it comes to setting expectations when it's time to buy, or when you're starting out becoming a acquisition entrepreneur. Now, real quick, there's someone I spoke to recently, yesterday, and they're trying to close their first deal, but they're going after larger deals, kind of like 25 million, 30, 40 million. So this individual had a $36 million deal, but at the same time, there are a lot of things that they did not have lined up for them to be successful, in their journey. For example, having a $36 million deal, they need to raise $5 million from private equity, but they have no clue how to go about that raise, nor do they have the proper things set up to be able to advertise their offering to investors legally, and for them to entice investors and for them to say, hey, I want to find out more, I'm interested in giving you a commitment, right? And also the deal that they're looking at is a deal that has very little assets. So if you're doing a $36 million deal and you're looking at bank financing and you have no background in actually doing this before, nor does your team have a background collectively in closing these kinds of deals, it's going to be very, very difficult for you to get a bank loan if it's something that's asset light, right? Meaning doesn't have a lot of assets at all, or hard assets. So that's going to be extremely difficult to pull off. But I just talked to that gentleman. I'm like, hey, I don't think that you're positioned to do a $36 million deal right now. You don't have a responsive team. You do not have investor presentations. You do not have investors that have already given you soft commitments. You don't have any banks, that you've shopped around deals and they say, hey, look, we're interested in this. This is the kind of deal that we do. Let's take a look. You don't have term sheets. So there's just a few things. Also, they're not capable of just, being the quarterback that's needed for their company at the time. So there's a lot of red flags that I saw, and I was like, hey, listen, man, you may want to tone down your expectations right now, trying to do a $36 million deal, and look at something that's between 1 to 5 million. But their reasoning was that smaller deals it's not worth the headache. I mean, that may be true, but for someone with zero experience, have never done this before, I think their best bet is to look at a $1 to $5 million deal and try to close that and have a couple deals under their belt, and then try to pursue a 20, 30, 40, or even $50 million deal. Even though they have a stellar team, their team is not responsive, and the experience of the team alone is not just going to give you the money, or they're not going to get you the money that you need. There's a lot more that's involved with that. So I just have to let them know, hey, your expectations, it's great to be ambitious, like I mentioned, but you may want to tone down that expectation, because doing a $36 million deal and trying to close that in 90 days and you have no capital raise, you don't have the structure set up to be able to do so, that's kind of on a wishful thinking side of things, right? But that's it, guys. I want to wrap this up, and that's just what I wanted to talk to you guys today about, is setting expectations and how to go about doing that, and just being able to thrive and be successful in your M&A journey. So guys, catch me later on. I'm gonna have another video, 2 more videos coming out today. The next video is gonna be at 4:30 p.m. and the next one after that will be 8 p.m. So guys, catch me next time.